All right, guys, welcome back to another episode of Limitless MD. I'm your host, Vikram Raya, and today I have Aleksey Chernobelskiy, who is an expert in syndications. He is come from Moscow to all the way to the US, where he's managed a $10 billion portfolio, a former institutional advisor. He's been on Wall Street, and now he's launched something called GPLP Match to help passive investors really partner with smart and very well put together investment platforms so they can invest and grow their wealth.
What if you could reclaim hours of free time each week, create legacy building wealth, and devote more energy to your passion projects without giving up on your career as a life-saving MD? Dr. Vikram Raya is a functional cardiologist, high-performance coach, and real estate expert, is here to give you the tools, strategies, and solutions you need to transform your life, unlock your limitless potential, and achieve greatness, all while freeing up your precious time. Welcome to Limitless MD. Let's dive in.
Welcome, Aleksey.
Thanks so much for having me.
Yeah, absolutely. So I don't understand really that origin story. I mean, it seems so amazing. Like coming from Moscow, how old were you when you came here, and did you know you're going to be in finance?
Definitely didn't. To answer the last question, I came when I was 11 and actually didn't really know what finance was until I actually started in material science engineering. And then at some point I was like, man, like maybe this isn't for me, and happened to have a good mentor that introduced me to investments and took off from there.
Okay. And so you studied, did you study finance in undergrad or graduate school?
Undergrad, that was one of the things I studied, yeah.
Okay. And then tell me about your journey from there. What happened? How did it unfold?
Well, I guess at a high level, got too many majors and didn't think about jobs enough. I ended up graduating with four. Finance was one of them. Right or wrong, I sort of assumed that majors will help me get jobs and didn't realize that that's not how America works. It's all about relationships. Graduating, I started in the quant trading world. Worked for a hedge fund out of Israel that traded the New York Stock Exchange using algorithms. Then I went to distressed debt, did some strategy consulting, turnaround work. Wasn't really until I got to Arizona that I got sort of a full start in direct real estate investing, let's call it. And that was at a public company called Store Capital, which is now private, and had a nice run there. Left what is now kind of crazy, but almost 4 years ago. And went on my own journey.
That's awesome. And you've become sort of an influencer in the space, sort of like an advocate for investors. How did that happen? And why did that happen?
Well, I guess after being in the institutional space for a little while, I guess you get pretty used to the way that things work. I would say in the institutional space, things are generally more organized, more professional, more transparent. There's more stakeholders, whether it be, bond investors or sell side research analysts, right? So there's just more oversight, if you will. I didn't really touch the private markets until I left really in full. And I realized that there's a lot of work to do in the space. On the one hand, I saw that transaction volumes are massive. A ton of people are investing their hard-earned money in a lot of transactions. So there's definitely the demand. There's definitely the supply in terms of GPs. But the transparency isn't always, it's actually quite hard to figure out who to give your money to and which deal is good, which deal is bad. And that's what kind of got me the jump start. Like the thesis was, man, this seems like a really big space that isn't nowhere near as transparent as I think it could be. So let me try advising on different types of LP investments and sharing those thoughts publicly in an anonymous way. So that's what I did after I left. Shortly after I left Store, that helped me build a decent following on Substack. Right now, it's like I think I'm like around 10,000 readers.
That's
Um,
fantastic, man.
Thanks. Yeah, and and after that, off the back of that, I'm happy to kind of like walk you through the journey of eventually starting GPLP match, where that idea came from, and whatever. But that was the side is where that started.
Cool. So, you're now starting to help, advise, you're starting to like put on your institutional lens and, okay, that deal makes sense. That deal doesn't make sense. Oh, be careful about this on this sponsor, and so you're starting to, provide some guidance and some clarity to the industry. And then, yeah, I want to get to GPLP match, but let's just talk about, I just want to really help my listeners. Let's talk about the anatomy of a bad deal. Maybe what are the most common things that a bad deal can have?
So assuming you're speaking about the perspective of an LP,
An LP doing
yeah.
it doesn't have to be multifamily. It could be any real
Yeah,
estate or
yeah,
asset class. Yeah,
I'll speak broadly. Yeah, so I
yeah,
think this might surprise you, or maybe the listeners, I don't know, but I think where most minds go is analysis. Like the NOI is bad, the cap rate is bad. Maybe there's exit cap rate compression, right? Like there's a bunch of things that you sort of look at on the property itself. What I will tell you is sort of like the first place to look is actually not the property itself, but the people who you're partnering with, meaning uh, who is the GP? Have they done this before? Have they had realized investments in the space? And it's okay if they haven't, right? But you need to like factor that in. Are they generally being honest about things that are going good, things that are not going good, right? And the second thing I would also mention that trips a lot of people up is just alignment. So, what fees are being charged, waterfalls, right? Co-invests, how much do they have at stake relative to how much they're worth themselves? And, I would say many of the deals I got in like 2021, most LPs would have passed on them just based on looking at the first two things.
yeah. So that's great. So it's really you got to look at these deals holistically from what I'm from sensing from you. You're saying obviously it's easy just to go look at the numbers, but beyond the numbers, you got to look at the team who's putting the deal together. You got to look at their experience, their track record. Also, like you said, alignment, like the vision and the mission has to all make sense. That's very important information. But how did that eventually evolve into you creating a marketplace to help, GPs and LPs sort of find themselves as the right partners?
Yeah, I think it was a pretty natural progression. You sort of just listen to people's needs and complaints, if you will. So, I mean, for about a year and a half, I was writing to, thousands of people, and I would take phone calls with people, advise people. And a very common thing kept coming up, which was like, do you know any GPs that invest in industrial in Boston? But they should be based in Florida because I want to meet them in person. And I would just be like, oh my man, like, do you think I'm a database? You know what I mean? And then, I would naturally speak to a GP a month later and they would be investing in Boston industrial and they'd be based in Florida. I'm like, huh, well, these people exist. So like, how do I actually put them together at scale? It was sort of the inception, I guess, of GPLP Match is it's like a very simple platform where LPs tell me exactly what types of deals they want to see. So, they can say industrial only or multifamily only or mobile home park only, or, you can sort of filter across 25 different things, including property types, markets, types of investment, security types, co-invest percentages, waterfall. I mean, like, there's so many things, right? Idea is you tell me what you want to see, and my job is to not bother you until I see a deal that matches exactly what you see, sorry, matches exactly what you said, right? And on the GP side, people submit deals. I simply like query the database and send notifications whenever there's a match, and the LPs reach out to GPs directly. I'm not in between in any way, and I'm not a broker dealer. So like it's I guess it's a new way of looking at the problem, and so far we've had tremendous success. But as with all entrepreneurial pursuits, you'll have to see where it goes.
Help me understand how many people have actually invested using your platform.
Yeah, so I mean, so we have 2,400 LPs currently, like that ranges from what I would call like retail investor all the way to large family offices, allocators. Well, we even have like one of the largest sovereign wealth funds that joined recently. So like the LP profile is like very diverse, right? But the platform allows for that because every single LP will set their filters for different things. So like the sovereign wealth guy has like, filters set for very large deals. The retail guy might say, I only want to see deals in my state, and so on and so forth, right? So that it's been working well, and I would say generally, when a deal is submitted, you'll typically, again, it sort of depends. There's like a supply demand thing to speak about here if we have time, but assuming the deal is decent, the sponsor is decent, you'll typically have people reach out. Obviously, they do their own due diligence, and to the extent that they're interested, they'll wire funds.
Amazing. If you had to send a message to all GPs or wannabe GPs who want to get started in real estate, and you want to advise them on best practices, what would you say?
This sounds crazy, Vikram, but like, just be honest. I don't know. Like, that sounds like, I don't know. Like, I can't tell you how many times, I come across just things that are not true in the deck. So like people sort of, labeling something as their experience when it's not really their experience, maybe overstating the experience that they have in order to get more investors. And I think, it's kind of strange, right? Because there is truth to like that working. I'm not gonna like, I'm not gonna, I'm not gonna say it doesn't work. Obviously, if you sound more experienced, people might invest with you. The problem is they're investing based on the wrong premise, right? And that I think long term just backfires. But perhaps more so, I would just say I think to a pretty incredible degree, LPs really like stories and they like to get to know you as a person. And I think people would be shocked by how many LPs would be interested in investing in a GP's first deal, assuming they know that it's their first deal and you're being transparent and you're showing your work and you also make it make sense to them on a risk reward basis, right? Meaning, if I, as an LP, and this is, we have a bunch of tools to help GPs around this topic, but like, if I'm an LP and I get like one multifamily deal a day, right? And another one comes in, it's their first one that the GP is doing, and the acquisition fee is higher, and the split to LP is lower, and the co-invest is not good. So obviously, they're not going to respond to you, right? But to the extent that you make it make sense relative to what's market, right? It's a private market. So determining what market isn't so simple, as you know. But like, if you're open, some
Yeah.
folks sort of like seeding your GP platform.
Yeah, it's almost
Um,
like you're earning your trust with these guys, right? So hey, give up some of the
yeah,
profits,
yeah,
give up some of the splits, and what happens then is you earn their trust and you work hard, and maybe that first deal is very successful. And then as you mature in the industry, then you can potentially adjust
yeah,
what you think
yeah.
is fair. But yeah, I like that. That's a really good advice. So listen, there's definitely like from 2020 to 2025, it's been a very interesting time in real estate. And you don't have a crystal ball. And in fact, there's a quote that's saying, anyone who says they have a crystal ball needs to learn how to eat glass. So that being said, let's assume I won't make you eat glass, but you do have a crystal ball. Look, we're in 2026 now. Maybe this is a new chapter. Perhaps there's a shift in the winds. Where do you see real estate as an asset class in general, and then maybe within that real estate, maybe some of the different asset classes like multifamily, industrial, retail, whatever. Where do you think we're going? And if you're an LP, what would you be, I guess, how would you advise LPs to prepare for the changing times? Like who are new to the game or they were ready to invest or they have deployable capital.
So I guess I'll address LPs first. Yeah. So this sounds really crazy, and I could be very wrong, but I have a hunch that I'm right. I think like 50% of retail LPs that have, let's say, one or more investment from 2022, 2021 are sitting on a loss currently that they're not even aware of, right? Meaning they invested 500,000, and that 500,000 is worth somewhere between 400,000 and zero, right? In terms of like just how much the position is worth today, right? The reason why I start there is because sentiment is like really important to gathering equity for new deals, right? So if a GP is reaching out to an LP and the LP has never invested before, that's a simpler conversation, right? Because there's no, I guess you can say baggage or experience, right? Maybe that's a better term, right? Assuming an LP has experience and the experience isn't so good, so then this year is sort of shaped up to be pretty tough, right? Because they're gonna slowly realize that, man, like some of these investments are not going to work out, and real estate is not so risk-free, right? And they'll probably be pretty hesitant to make new investments this year, is my guess. So I guess on a global, I guess, dollars deployed level in 2026, I would say probably the same as 2025, or maybe even less in terms of retail cash. I think institutionally it might be higher just because I do think that a lot of the foreclosures and things like that are real sales that will probably come through this year that have been, in some cases, waiting for 2 years. Like the lender can't extend something forever. And I even on the platform, I've seen quite a bit of an increase in those types of deals where the GP is buying something directly from the lender. I think those would be like the biggest two that I would point out. I
Mhm.
think retail raises will continue to be difficult. Institutional money it's almost like desperate to deploy capital into stuff, but it's having a hard time finding a 15 to 18% return after paying the GP on a JV deal. So we're still a little bit of a standstill, I think.
So you're thinking either second half of 26 or perhaps even 27 for the new shift or the tide to happen.
Yeah, I just posted about this today. Like if you look at like price per unit, the price per unit today on average across multifamily is like right around like mid 2021 levels. And I just like took a screenshot of this slide from an economist and it was said like, hey, like the prices have stabilized. And I was just like, have they though? Right? Meaning if just because you're at the same level as 2021, you're still forgetting some big things, such as like in 2021, it was like basically free to borrow money, and it's not today, right? So I don't think those prices are comparable, right? Another thing is like NOI was generally expanding during 2021, like rents were going up like crazy, expenses were going up also, but not to a crazy degree. And now I think in many cases you have like NOI dropping, right? It's just not like an expansionary time, and so I think we still have a ways to go. Might not be the most popular opinion, but I guess that's where my head is at.
No, no, it's awesome. I like your reasoning and your science behind thinking about those two time frames. That's really cool. Talk to me about what asset class are you bullish in? And obviously it doesn't have to be real estate, but are you bullish on any asset class right now?
Property type, I assume you mean?
It doesn't have to be it doesn't even have to be real estate.
Oh, I mean, I spend the most amount of time in real estate. It's
Okay.
probably the thing that
So
I know
within real
best.
estate, is there an asset class that you're bullish on?
I don't know if it would be called an asset class, but I just love distressed stuff. Like
Yeah.
anytime distressed stuff comes across my desk, I start like salivating.
Yeah,
You know,
and
the-
we've been active in the marketplace, and so that's what we're seeing a lot of. And
yeah.
it's actually okay that not everyone is ready to be transaction oriented because it really is. There's not much competition to pick up these distressed assets right now.
Right, right. It's funny because like I've never I guess as a person directly showed an LP a deal. I've only done it once, funny enough. And it was like before GPLP match, before I started advising, like I saw this like fascinating office building that was vacant. And I was like, this is a killer deal. Like it's insanely distressed. No one will want to touch it. But it happened to be that like a few days before I spoke to someone at a coffee shop in Phoenix, and he was like, I really want to see all the distress. This was like back in like I think early 2023 or something. And I was like, oh man, like this is crazy. Like I just met a guy who wants distress. This is like the best distress deal I've seen in a long time. Surely he's going to be interested. So I sent it to him and he was just like, oh, this is too distressed. But so I think
Through
you
stress.
see
Yeah.
that a lot.
Yeah.
You see that a lot. People love the idea of distressed until they have to like,
It still
uh,
takes a little bit of faith, to go in.
yeah, until you have to see what distress looks like
Yeah.
and be able to like stomach that risk. It's just different than
And
window shopping.
what do you think about rates? Will they stay flat? Will they go up? Will they go down?
I mean, in my own head, for my own sake, I just assume flat. Like it's very hard for me to imagine them dropping by a lot. Having said that, like I definitely didn't predict like what happened in 2022. So, and I'm very far from an expert, and I have also learned it's funny if you look at like SOFR curve predictions from all the economists. I don't know if you've ever looked at it. It's just amazing because it's like the best economists where like they're literally trained and this is their only job, like they were all wrong, right? And so it just reminds you, and I think it's very humbling in a sense because you realize,
I definitely think it's humbling.
yeah, I mean, you can only like to a degree, you can't control what you can't control, but you also have to price in a certain number of like
Black
of
Swan.
yeah, and just like sensitivity to
Yeah.
things going in the wrong direction.
Yeah. What is the message you want to relay to investors, real estate owners, and sort of the general community? Like, what's the impact you want to have on them, and what's the message you want to leave? If I gave you a billboard in Times Square for a whole year, what would you put on there?
I mean, probably GPLP match nowadays.
Yeah, why not?
Yeah, I mean,
That's probably
that's
number
just
one. All right, what if I give you two billboards?
yeah. I guess in terms of a message, like I'm really obsessed with the idea of like transparency and honesty, meaning if an LP, and by the way, this goes both ways. So like one example is sometimes GPs ask me like, hey, am I charging too much in my acquisition fee? And my answer is you can charge whatever you want. Meaning you can charge whatever you want, you can make your waterfall whatever you want. It's harder to raise money if you are further away from market, unless you're raising money from, let's call it like fairly clueless people that can't compare to other offerings, right? But the larger point I'm trying to make is my biggest like I guess trigger in a sense is not when someone charges a high fee or has like a non-market split or whatever. It's just like it's when they're doing that while almost ensuring that the LP doesn't understand the case. It's not a simple topic, right? As you know, Vikram, because it's like how much of due diligence falls on the LP, how much needs to be disclosed by a GP. It's a private market, and like there's no rules in a sense to the game. So I wish the game was a little bit more transparent.
What I have noticed, because when I started, learning about real estate in 2012, 2015, I mean, the word syndication was not very common and not many people did it. And I didn't know that many people in that business. And honestly, now it's like, it's not, it's more widespread. So I think there's generalized education has increased. I think the awareness at least has gone up,
Yeah.
involvement has gone up. And so I think a necessary reformation, as you're suggesting, is happening. Whether they want it or not, it's happening. Uh,
Yeah.
and I think the industry will be better for it as we move into the next part of the decade. So
I think
and
so.
I think you've played a huge role in it. So thank you for being part of the voices of reason out there.
I definitely try.
Awesome, man. Great. And how can people learn more about your platform?
Just gplpmatch.com, and my
So it's
email is
just you
alexei
want
at,
to you want to just spell it out for the folks?
yeah, GPLP match, match.com.
.com. There it is, guys. So It's a nice marketplace where you can find deals based on your criteria, and then obviously do your due diligence and make the right decisions. But now it's curated based on your preferences, which is great. Thank you, Alexei. I really appreciate you, and looking forward to having more conversations.
Sure. Thank you so much for having me.
All right, guys. Until next time, be phenomenal.
Thank you so much for listening to this episode of Limitless MD. If you found value from this episode, I encourage you to share this episode with a friend and let me know by leaving a review. For more information, make sure you check out the links in the show notes below or simply visit vikramraya.com. Until next time, be phenomenal.